Wait, how am I going to do my own StreamYard? I got to be able to share my screen, right?
Yeah, we're live.
We're live?
We're live.
All right, baby. That's how we do it. What is going on, Zinger Nation? You got a special guest host for the day. We might get producer AB in a little bit. Not entirely sure. But at the very least, you got special producer, special host of the day. You got Hot Sauce Luke hopping back in. There we go. So that's what I'm talking about. Anybody who's been watching our streams for a while, let's say a year plus, you used to get me every day. I used to get you guys every day. Let's put it that way. That's a better way to put it. Doing these streams used to be literally my favorite part of the entire day. I used to do an hour, 12 to 1 every single day. You know, we had some big news last year for Benzinga. And that we partnered up with a private equity firm called Behringer. And so when it started getting really hot and heavy in consummating that partnership, that's when my daily time on stream had to subside a little bit. But I'm telling you guys, I'm back. I'm just hopping into it fresh today. And we will keep it running. Up at noon, we're going to have Stephen Kalayjian hopping on as a guest. He's a recurring guest that joins us every single Thursday. Until then, we are going to be talking stocks. Yeah, see, that's what I'm saying. OP in the chat saying, is it now Powerhouse Luke again? That's what we're talking about, baby. If you guys have stocks, drop them in the chat. A little bit of preview as to what we have coming up today. We're gonna hit some news. We're gonna start off with just some hard news. We're gonna talk some stock ideas. I've got a couple of stock ideas for you. And then we're going to be pulling some tickers out of the chat. So if you guys have tickers that you want to have analyzed live on the show, drop them in there. My credentials for analyzing them is that I've been a member of the Benzinga news team for over 10 years now. I would say that I'm in the top 0.0000001%. Let's call it maybe the top 10,000 people in the world in terms of analyzing news and the impact that news has on stocks. So go ahead, throw them in there. I've got a few things that I want to start with, and then we'll keep cooking. So you know, let's talk about news. I'm just going to tick down the big headlines of the day. Of course, CPI, that's the talk of the town today. We had CPI coming in at 8.2% versus 8.1% that was expected. What does that mean? That means that on a year-over-year basis, for all of us consumers out there, if we go ahead and we throw out oil, everything that we're trying to buy is 8.2% more expensive than what it was a year ago. Why does this matter? The big reason why this matters is in terms of Fed decision making. There's been a lot of talk about Fed pivot as the Fed's been aggressively raising rates on us. It, of course, hasn't been good for stocks. You know, when the market got killed this last stint that we have, I got a chart on my right-hand side of my screen here. Let's zoom in on that of the S&P 500. I'm going to pull it out to 3 months that we're looking at now. In this last stint where the market just got absolutely obliterated, there was a lot of talk going around of a Fed pivot. Oh, I'm sorry. I got gold up. Here we go. Look at that. Charts match each other. This little sell-off here is a lot of talk going around of a Fed pivot. You know, it is the idea of a Fed pivot founded? Not really. It's not founded in data, at least. It's founded in pressure. I think the best example that we can pull of that is how Trump, you know, pressured the Fed in a major way to keep rates low for a very extended period of time. And so when we see this inflation data coming out today, again, we're at 8.2% versus 8.1%. That means inflation was worse than economists had expected. It gives a little bit of credence that, hey, we might get the Fed hanging out. I want to throw this one out for the chat. Fed 0.75 next rate raise. If you think that is the most likely outcome, that the Fed raises rates by 0.75%, put a 1 in the chat. If you think that it's more likely that the Fed does a less aggressive rate hike or even no rate hike, they decide to skip one, put a 2 in the chat. I'm definitely in that 1 camp. I think that we definitely have another 75 in there. but I want to let's crowdsource this one a little bit. When I used to be on the show every day, we crowdsourced everything. That was like our little trick. But we would do two things. We'd look at what are the most read stories on Benzinga.com. We would also crowdsource everything. Let's keep rolling through some top headlines of the day before we get into individual stocks. Mortgages. 30-year mortgage rate is now up to 6.7%. That's down from 6.9% last year. Generally positive, generally not a crazy move. Does that mean that drop in mortgage rates? Does that say, hey, I'm going to go out and I'm going to start buying up home builders? I'm going to start buying up Zillow shares? No, for me, that's not doing anything for me, especially now that we've moved out of this peak home buying season. Looking out to the chat for your votes on what you thought the most likely rate hike is. I'm seeing a lot of ones in there. We got a couple twos. If anybody wants to go ahead and throw out why you think that these hikes are more or less likely to happen, go ahead and throw those out there. But again, it's looking like we got mostly ones rather than twos. Other big headlines from the day. Let's move over to oil for a second here. All right, you got oil gapping up a little bit higher. Inventory build, 9.9 million barrels versus consensus, 1.75 million barrels. Generally, that means that is a negative for oil. Again, I'm looking at this from my news lens. We're looking at a 3-month chart on the price of oil right now. We're using USO. That's the ETF for oil as a proxy. You zoom it in a little bit. Here's 2 days of the chart on oil that we have right there. 9.9 million barrel build means basically that there was more oil that was produced than oil that was consumed. Last week, there was a 1.3 million barrel drawdown. Again, consensus for this week, the expectation was 1.75 million barrel build. My take on this one, I'm not trading this one, but my hot take on this one would be to fade the move in oil. We have some of this exuberance that's happening in SPY right now. That's probably part of the catalyst that's moving oil a little bit higher. But again, when you have that big of a build, that's definitely a negative news item for oil. I would lean on the side of fading that one. Other big news for the day. I'm going to pull us over to a couple Benzinga exclusives that we gotten. Alrighty. So check out this symbol, ticker LASE, and I'm going to throw this one out to the chat. Has anybody ever heard of ticker LASE before? If you've heard of that one, throw a 1 in the chat. If you've never heard of that one, drop me a 2. Okay? Not a super common ticker. And producer Rohan, could we pull my screen off for a second? Thank you, sir. All right. Here's the reason why I'm asking about this one. You're like, why, Luke? If you're going through top headlines, you got a lot of macro headlines up there. Why is ticker LASE something that's on your radar? We've got a Benzinga exclusive for it. This is a stock that has a market cap of $23 million prior to their move today. They're up 40% today, so you can add about another $10 million of market cap on that one. It's called a $33 million market cap stock. It's a micro cap. That's pretty much as small as you can get it. And go ahead and throw my screen up on there again, producer Rohan. Alrighty, check it out. Laser Photonics shares are trading higher to the company announced Coca-Cola recently completed the implementation of its first clean tech handheld laser blasting system in its manufacturing facilities. Basically, the TLDR, let's really dumb it down here, is that Laser Photonics is $23 million market cap stock yesterday, $33 million market cap stock today, and just got to deal with Coca-Cola. So very few people voted in that one. We got 2 people. One person said they don't know that stock. One person said that they now do know that stock. Stock that I had never heard of prior to today. Again, the big catalyst here is that they got to deal with Coca-Cola. Why does this one especially matter to me? Check it out. We had a Benzinga exclusive there. So I'm signed into my Benzinga Pro terminal. That's pro.benzinga.com. You see our headline came around at 6:30 a.m. Press release not out until 7 a.m. So if you are a Benzinga Pro user, You were tuned into the Benzinga Twitter account. Gave yourselves a round of applause. You caught a 40% move in this one before the press release came out. Alrighty. Let's keep us clipping through a couple of headlines here, and then we're gonna talk a couple of stock ideas. We want to talk about Truth Social for a second. I think that's an interesting one. The news. What am I doing? DWAC. Alrighty. So we're gonna Truth Social, throwing that one up on our screen now. All right, you got a 17% move higher in ticker DWAC, DWAC. That is the SPAC that is supposedly acquiring Donald Trump's Truth Social app. Good and bad with this one. Let's break it down like that. The good is Google Play approved Truth Social for its app store. So Truth Social, it initially launched on for iPhone users. It's been available on iPhone for quite a while now. It has since been recently approved for the Google Play Store. That is why the stock is trading higher right now. I think that this is 130% a fade move. This is one that I might actually trade today. I might actually fade this one shorter. I'm curious where the group is at. If you price right now is 1777. If you think Truth Social finishes the day higher than that, put the 1 in the chat. If you think it finishes lower, put the 2 in the chat. I want to see where everybody's at with this one. I'm definitely a 2. I'm requiring everybody who's watching on the stream to vote. Again, let's get some idea sharing. Let's get some crowd thinking going here. I think that this stock absolutely finishes lower today than the 177. We got 139 people on the stream right now. I want to see 139 votes in there. Here's my thesis, is that I think that it's incredibly unlikely that the Truth Social deal happens. If Digital World, DWAC, were actually to be acquiring Truth Social, I think that this is positive. That probably warrants, that probably justifies a move higher in the stock. That said, I think it's incredibly unlikely that DWAC is, or that Truth Social is going to be acquired by DWAC. I think that the market knows that. If you're going to say that, hey, there's still a lot of hope going around, let's zoom out. Here's a 1-year chart of DWAC. Okay. Take a look at this price action. Does this price action convince anybody that this deal is actually going to happen? A deadline after deadline gets pushed back. That's the question that you have to ask yourself. Again, I think that the market knows this. I think that of course, clearly we can see by the price action, you got a lot of positive trading on the stock as soon as that news came out. But I think that this one gets faded by the market. Nobody's buying this SPAC for above $10. Is where I'm at. No serious money is coming in and buying this back for $10. We got a little bit of help from the chat. We got 3 people out of 141 now who came in and put in their opinions. We're still short by about 138 people. All right, taking a second to read some of the comments out of the chat. I see Jay Rice saying important not to get caught up with data price always wins. Data can be perma bear, perma bull, and exactly that's where my mind is at. Again, as we're reading through top headlines of the day, you got the crude oil bills, you have the price of oil up. I think that the market is going to fade oil. We'll see what happens. Again, price is going to tell us what happens. The data is not good, but price is going to win here. All right. Other comments in the chat. Banks all ripping. Let's go ahead and grab a couple of those up. So you got 4.27% on Bank of America. Look at JP Morgan, you got 4%. Goldman Sachs, you've got 3%. Bank movement is just going to be in line with the market here, guys. There's nothing too crazy that's going on here. Let's talk about banks for a second. And when we talk about banks, I want to bring up this concept of beta. Beta is the degree to which, or when you look at beta on an individual stock, it's the degree to which the stock trades in line with the broader market. So if something has a beta of, let's call it 1, that means the stock is correlated 1-for-1 exactly with the stock market. If something has a beta of 2, that means it's twice as sensitive to move with the stock market. Banks are all high beta stocks. I paused for a second because I didn't want to be superfluous and throw out the word all if it's not actually all. But the reality of it is that banks are pretty much all high beta stocks. When the market is up, banks are up more than the market. When the market is down, banks are down more than the market. The reason why I want to pull this concept out is that I've seen a lot of chatter recently that says, hey, rising interest rates are good for banks. That sentence in a vacuum is generally true. As interest rates are higher, banks can make more money off of the cash that they have in hand. But we cannot ignore the fact that banks are high beta stocks. When the market goes down, banks go down. High interest rates, increasing interest rates, big Fed rate hikes are not a net positive for banks. Okay, the banks will make a little bit more margin on the money that they have on hand, the cash that they can lend out. But their economic activity is going to slow down. I was actually talking to a banker who does, yeah, banks also get affected by those higher rates, Shelly's saying. Exactly. I was talking to a banker who does mergers and acquisitions lending recently, like literally yesterday. And the sentiment that banker had was, hey, deal flow has come way down as the market's gone down, as the economy is slowing to go down. So all the mergers and acquisitions that are happening, more than halved from the previous year. And so that means that the banks are not, they have, let's say, call it half as many opportunities that they could lend for. He also said that management is getting way more conservative with the lending decisions that those banks are choosing to make. So let's say that there's a 50% reduction in deal activity. Let's say management gets 20% more conservative. That's a 40% decrease in bank lending activity, at least for mergers and acquisitions. And so while the money that banks do lend out, they can make more money on, the banks are in the position where they're at a net negative. Higher interest rates, slower economy is not a good thing for banks. Looks like we got some commitment in the chat. And correct, banks are not a 2 beta stock. There's pretty much no 2 beta stocks. When I say that they're high beta stocks, I'm talking about like a lot of them are 1.3 beta stocks, something along those lines. A 2 beta stock would be crazy. All right. I'm going to keep us clipping through a couple headlines here. If anybody has tickers, go ahead and throw them out into the chat. This is my first time I've done this in over a year. Okay, so I'm a little bit rusty. I didn't write them down as they were coming in, so you're going to have to redrop them again. I want to talk about a couple individual stocks here. Let's go ahead and I don't even know if we want to do Coinbase. Let's do Coinbase. Why not? Crypto winter makes it very hard to own this stock. The stock is cheap. I'll say that again. Personally, I've got a small exposure to Coinbase. It's not a sizable position of mine. The thesis that I have on Coinbase is that right now you can buy the stock at a relatively cheap valuation. And when I say cheap on Coinbase, we're talking about the stock is trading at forward price to sales of about 3.5 times. I use forward here because revenues are obviously going to be down, not obviously, are very likely to be down on a year-over-year basis. We saw 2020 huge year of revenue growth for Coinbase, 2021 slower, 2021 huge year revenue growth, 2022 slower, 2023 also expected to be slower than this year. But the stock is trading at 3.6 times its forward price to sales ratio. If you believe in crypto as an asset class and something that will exist for an extended period of time, Coinbase is sort of your blue chipper to go ahead and buy. I can talk about it from a business standpoint. Benzinga recently opened up a business crypto account. We have select customers that pay Benzinga as a business via cryptocurrency. We were searching the market for solutions, and Coinbase was the no-brainer solution for us. So while we're in this crypto winter, I do think that it's really tough to own this stock. I think it's really tough to try to trade this stock, swing trade this stock on the long side. That said, the stock is relatively cheap, and if you do believe in crypto as a long-term asset class, something that's going to be around here to stay for quite a while, I don't think that it's a horrible stock to chuck into the long-term portfolio. And I say that coming from my personal perspective of having held Coinbase in a small position in my personal portfolio. I want to throw this one out to crowdsource as well. Coinbase, you have to buy it now, and you have to hold it for 5 years. That's the scenario we're putting out there. Okay, you have to buy Coinbase shares now. You have to hold Coinbase shares for 5 years. You're not touching the stock for the next, let's call it 1,700 days. Put a 1 in the chat if you would do it. Put a 2 in the chat if you wouldn't. All right, again, Coinbase, 5 years, 1 in the chat if you'd buy it and hold it over that period of time, 2 if you wouldn't. Nobody actually has to do this. We're not asking anybody to actually do this. So I'm floating it out there for the group. Next up, I'm about to take us into an interesting segment. This might be a segment that we haven't done since I was last doing my daily show about a year ago. But this is where I like to give everybody who's watching the Benzinga YouTube streams a little bit of unique data, some info that only we have, which is looking at the most read stocks of the day. I'm about to share my screen again, and I'm going to be pulling up the most read charts of tickers on Benzinga.com. Reason why I like to do this is, I think it gives us a little bit of insight into what the market cares about. We get about 10 million visitors a month to Benzinga.com. It's largely individual investors that we're getting to Benzinga.com. What are the individual tickers that individual investors care about? Nice little nugget of information that we only get because we're hanging out and we're watching this show.
So when you say most read tickers, you're not talking about the tickers that are down the most.
Correct. I'm talking about what stocks are people choosing to read about.
Got it.
Should we do it?
Yeah, let's do it.
All right. And going back to this Coinbase poll, let's close the loop on that. Literally exclusively 2s. I guess that I would be the only one.
That you would if in the buy and hold for 5 years scenario, you would buy it.
At $67, yeah, 3.5 times forward price to sales, which again is already pricing in an expected revenue slowdown in the upcoming year. Yes, I think so.
Yeah. I would see it. I could see it being likely that at some point in between now and the next 5 years, Coinbase is trading higher than it is now, and that you could sell it for a profit. But then if you held it for 5 years, who knows where it's going to be? It all depends on where Bitcoin is and kind of the macro sentiment of crypto.
100%, and that's the entirety of my case, right? Is I'm saying that I do believe that crypto is an asset class that's here to stay. I think this crypto winter has spurned a ton of people who don't think that that's the case. But again, sitting in my world where I do believe that's an asset class that's here to stay, that's why I'm okay holding the ticker. And AB, I'll catch you up on where you've been and then where we're going.
Okay.
We tick down some of the top headlines for the day. We're looking at some price action.
Can you tell me this? Was there one big headline that we can attribute the reversal to, or is there, or is the market just deciding to rip back here for seemingly no reason?
The market's deciding to rip back here for seemingly no reason.
Okay.
Inflation was worse than expected.
Right.
You got oil builds.
Okay.
Right. The previous week we had a drawdown. You have oil builds, which suggests
that's good.
No, that's not good. You don't want that.
Why not?
You want the economy to be going bonkers. You want industrial production to be sky high through the roof, and you want
oil builds. What do you mean by that?
Oil inventories increased.
Oh, okay.
We pulled more oil out of the ground than oil that we pulled out of our inventories.
All right, that's not good.
Yeah, it's not good. But you saw the market deciding to go bonkers a little bit.
Yeah, I mean, so far, I think at least part of the inflation that we're seeing is from job and wage growth, which is which are signs of a decent economy. So I think there are signs. Certainly, the oil build's not great, but there are signs out there that the economy isn't grinding to a halt, as some people may believe. So that could be giving investors some confidence. I don't know. We're just probably a little bit oversold here. I don't know. The Fed now is going to be able to keep rates higher for longer, as long as inflation continues to stay sticky. So seems like a classic don't fight the Fed situation right now to me. I don't know. Are you buying this rally or not?
I'm not buying the rally.
Neither am I.
I'm fading.
You're fading the rally?
I'm not actually fading the rally, but I may actually fade oil. I may fade USO today.
Okay.
All right. Most read stories on Benzinga.com. Let's give everybody out there an exclusive look at, what are the stocks that everybody's reading about today. Number 1 on the list, number 5 on the list, I'm just going to throw out, okay? You've got a Trump story, you've got a Putin story. Whenever we do these stories, we always tie them back to the individual tickers that they could impact. They're hot stories. I think these are more correlated with the personalities being mentioned than the individual stocks. But let's go ahead and tick down some of these individual stocks. Number 1 on the list, we've got Twitter. Twitter being aligned with Musk. Number 2 on the list. This is where I think it's really interesting. And I'll say this: you guys are getting one snapshot look at this. I get to look at this data every single day. It's been a very long time since we have seen altcoins pop up as most read symbols on Benzinga.com.
Wow,
it's been a really long time. Months. I'll go so far to say that these are top symbols. So number 1, we have Twitter. Number 2, you've got stable coins. And then number 3, you've got Dogecoin and Shiba Inu. Clearly still a lot of people that own those. We've been getting no readership on those symbols for a very long time. We keep clipping down. You've got the inflation numbers, of course. That's going to be a top story up there. Then you've got Amazon, and Facebook.
Big tech. People are still interested in it.
Yeah, absolutely. And then let's keep going. Actually, there's some. Now it's starting to get more interesting. TSMC, that's Taiwan Semi, earnings yesterday. That one making it what does that make it? The 5th or the 6th most read symbol. Bitcoin is on there as well. Bitcoin, we still do see it. Like I said, it's been several months since we've seen altcoins as most read symbols on Benzinga.com. Bitcoin, however, has been been getting consistent readership. Then we're back down to Amazon. Then we got Lufthansa and Apple on the list. You want to talk about Taiwan Semi for a second?
Yeah, TSM.
Yep.
Let's talk about TSM real quick. We'll pop that Benzinga Pro back up. I haven't looked at TSM's chart in a while, actually.
Yeah, I'm just scrolling down to my Benzinga Pro here to grab the numbers. Alrighty. So you've got a small beat on net profit, and you also have a small beat on Q4 revenue. Pulling us back up to the chart here, so you've got a 6% move higher in Taiwan Semiconductors. So again, the headline numbers is that Q3 was a little bit better than expected. Expectations for Q4, again, not a ton, but a little bit better than expected. I have a really, really tough time buying this stock. I don't have a tough time with the industry.
Geopolitical concerns?
Geopolitical. I mean, here's my thing: is we're all already so exposed to geopolitics right now, geopolitical issues, macro headwinds in everything that we own. I'm not picking any of these stocks that are going to maximize that.
Yeah, I mean, I agree, but I also think like there's always going to be risks in any stocks. That's the risk in this stock right now. Like you said, like from a valuation standpoint, looks good. Industry looks good. Growth aspects look good. But that's the risk here, and that's why the stock is trading down. Let's see how far it's drawn down from 140. It's down more than 50% right now.
Yeah. So again, numbers look good. The fact that they can come out with better than expected Q4 revenue expectations, despite this macro headwind that we're in, great sign for the company. Great sign for how the business is doing. But I'm not going to jump myself into more macro geopolitical risk that I'm already taking with everything else that we all already own.
Yeah, I mean, speaking of geopolitical risk, how's our baby Baba doing? $75. We're below 75.
What we said about this stock was very true. Do you agree?
I don't think the story is fully played out yet.
What we said was anybody who's bullish on this stock is going to look like an absolute genius or idiot a year from now. And we said that when in March.
Okay, so I'm looking at a chart right now. Say we did say it in March when Baba was at 115. So right now you look really dumb. But
yeah, but I'm saying what we said was true. You're either going to look like a genius or an idiot. Right now you look like an idiot.
Right. In 6 months from now you could still look like a genius. Who knows? We have no clue. But certainly
there's no middle ground. There's no, oh man, it moved against you, or
yeah,
there was something unexpected that happened. It was literally, you're going to buy this stock at, on a 65% drawdown. You're either going to look like a genius for buying that stock, or you're going to look like an idiot for buying that stock. I was on the side where I did go long. I bought leaps, I bought calls that are going to expire in January of 2023.
Ooh, those probably are dead in the water.
Dead in the water, exactly. DOA. Not going to be, retaking any position in the stock right now. But they were very inexpensive to buy. I said I wouldn't buy the stock outright, which is why I went ahead and bought the calls. Significantly less capital I had to put up. And again, we said we're either going to look like geniuses or we're going to look like idiots. We're definitely on the idiot side of things.
I'm still bullish. Down here.
Okay, Jay Rice has got a great comment in the chat. All right, what else is up on your radar, producer AB?
I see Rob Roy hanging out in the background. We're going to get Rob on in a few minutes here. We're going to run through some charts with Rob. And Steve Kalayjian will join us later in the show. What else is on my radar outside of Baba? It's a good question. I've still been watching the solar names that were showing a lot of strength. Enphase Energy, First Solar, these stocks that were pretty much trading at or near their all-time highs as recent as a couple weeks ago. I do think that those names continue to be interesting here.
That is sort of interesting.
Like the whole market is down 30%, the S&P is, and these names are still up at or near their all-time highs. Definitely have drawn down in the last week or so, but I think it's shown that there is demand out there for the stock, both on the institution front, potentially on the retail front as well. The AAII, American Association of Individual Investors sentiment survey came out again today.
Oh yeah, let's do that. Give me the last week numbers and let me try to guess it again.
All right, so last week,
and what producer AB is talking about is it's a survey that goes out to individual investors. The question that is asked to those individual investors are, right now, are you bullish on the market? Are you bearish on the market? Are you neutral on the market?
Yeah.
Give me last week and let me try to guess this week.
All right. So last week, about 24% were bullish, about 21% were neutral, and about 55% were bearish.
Okay. So you had 21% bullish.
Last week you had 24.
Okay. Let's make this really simple for the chat. We got 156 people watching right now on the stream. Okay. 24% of individual investors were bullish on the stock market 7 days ago. Question for the chat is, what percent of individual investors are bullish on the stock market as of today? Again, it was 24% 7 days ago. What percentage of individual investors are bullish on the stock market as of today? That's the question that I'm throwing out there.
Yeah, and I mean, what we're looking at for this too is because oftentimes, like when people are the most bearish, what's shown on here, and I'm not going to share the screen yet because I can share it without cutting off this week, so we don't give it up yet.
Time frame, asking time frame. Let's call it this week today. Let's call it Monday through Thursday.
Yeah.
Over what period of time are they bullish?
Oh, it's the next 6 months.
The next 6 months.
That's how they feel about the market over the next 6 months, and it's technically going back from last week to this, so I believe last Thursday to this Thursday, or last Thursday through yesterday.
All right, so we had 23% bullish. That's less bullish. You got 30% bullish in the chat. That's more bullish. 35 more bullish. 20, 15. Jay thinks that the market's getting more bullish. Put me down for 21, producer AB. 21% bullish. So 24 last week, 21 this week.
Do you think it dipped a little bit as price came down? We had a couple red days.
Correct.
So looking at the data on the website, the 1 year bullish high, almost half, so 48% were bullish week ending in November 10th. Just happens to coincide with basically like the top in Bitcoin and a lot of retail driven growth that topped out in November. So maybe something on the flip side will happen as well, where once we get the bearish high, which so far the 1 year bearish high you can see down here was 60.9% ending September 21st. And we did rally a little bit from there, but now we've since made new lows. So I wouldn't be surprised to see the bearish number continue to tick higher. But time for the reveal. Drum roll, please. No, drum roll.
No, that's still a good one. Hit it anyways.
20, a little less than 20.
All right, come on. That was pretty good.
Yeah, you were pretty
I
close.
was at 21.
Yeah. But as you can see here, you know, got a little bit more bearish. Still not close to that 60% that we were a couple weeks ago. So, again, we'll see as we made new lows. Inflation came in hot again.
Dude, I think today is such a fade day. So as we're going through this news flow and we're looking at all these individual tickers, I think it's such a fade day. It's such a fade the rally day.
Yeah, my only, like, I guess problem with the idea of, like, every time we get more inflation data or more, you know, hot inflation, the market just keeps going down, is part of it is that the economy is, like, too hot. And that's not bad. You know, like part of it, I think, you know, it's not necessarily, it's obviously not good for the outlook in the sense that the Fed is going to have to continue to raise rates. But as far as all the fears about, you know, recession over the past 6 months, it seems to me like the market is kind of front running a recession that's going to come because the Fed's raising rates and not one that has come yet. And we're still seeing that it hasn't come yet. And the Fed effects haven't really, you know, been that drastic for the labor market, for inflation yet. But hopefully, you know, it does start working so they can stop soon. I don't know.
Fair enough, sir. All right. What time is it?
It is 12:13. It's about time we got to get Rob Roy on, see what he's been watching. Any final headlines, stocks, tips you got for us today, Luke?
That my opinion is that today is such a fade day. Robert Roy, I think, is going to have a much better sense of that than I do. Again, the perspective that I have to look at everything is that I've been working on news here at Benzinga for literally 10 years now.
Wow.
It'll be 10 years in 4 months. Yep.
In 4 months, it'll be 10 years?
10 years that I've been working on news here at Benzinga.
So 9 years and 8 months, right?
So basically, that's every day, 7 days a week for a decade.
It's a lot of
All
days.
I'm doing is looking at stock market news and looking at how individual stocks and how markets react to it. All right, that's my expertise. I'm not trading full time. I'm not investing full time. I'm not stock picking full time. I'm doing stock market news full time. That's it. And yeah, all indications for me point to today's a fade day. Let's see how it goes.
There you have it. Mr. Luke Jacoby, everyone smash the like. I'll drop his Twitter in the chat. Go give him a follow. Thank you, Luke, for hopping on today.
Absolutely. If we can get the special intro
Yeah.
for Mr. Rob Roy.
Let's get the special intro for Mr. Rob Roy. Again, guys, smash the like for Luke so he'll come back on and join me. Love having him. All right, guys, without further ado, let's get that special intro rolling for Rob Roy. Hey, Rob, how you doing?
Man, I'm so special. I get the intro twice, huh?
You do. So nice. You got to play it twice.
There you go. How you doing, my friend?
I am good, man. Good. What have you been up to? What have you been trading?
Crazy day, right? I mean, we were going through our candidates this morning right at 8:29 and everybody looking awesome. And then the market flipped, which was sheer luck for me because I had problems with stops yesterday that didn't trigger properly. So I got out of my call trade on Tesla right at the end of the day yesterday, held a put trade overnight, which I don't don't like to do. I was only
but that paid out because Tesla opened down today, right?
Bingo, and crashed real quickly. The options were dropping like a rock. I caught it at, it was like $16 when we opened up on the option, and I finally got out of it at 13.5, and that was within the first minute.
Wait, why were the options coming down if the stock
put option value was coming down because the market had started to climb back up?
Oh, right at the open?
Yeah. So the price of the options were overinflated. So they pulled the options prices back, and as we flipped and the market turned, it went sideways on it, which I'm okay with. I actually have naked puts on Tesla as well. I want more shares of stock, so I sold some puts on it as well. But today we closed out of a trade that was sheer luck. Nothing to do with anything but luck on this trade at all today.
Hey, well, you know what they say. Sometimes it's better to be lucky than good.
Yep, absolutely. I'll take it all day long. $4. I'm happy with it.
Who also said, or someone else had said, they find the harder they work, the luckier they get.
Yeah. Well, and I think that's a big part of it, right? I mean, I've never been given anything in my life, and I've been told my whole life I won't succeed at anything that I do. Everything. I didn't have a college degree. I wouldn't get anywhere in business. I became an executive vice president of an $80+ million international company. I went out to teach stock market education and trade, and I was told that I couldn't do it. I didn't have the energy to teach a 2-day live event. I was the best speaker that they had. Started Wealth Builders. I was told, yeah, you'll never make it, man. It's too competitive an industry. We're crushing it. We're hiring another coach right now that's going to come on in February to teach some new credit spread strategies that he does. We're killing it. We're not the average company here because I'm not the average person where I'm told I can't succeed and I fail because I listen to everybody else. Don't listen to anybody else. Do what you do. Don't pay attention to the naysayers.
Right. Yeah, no, I love that. And I know you guys have been doing really well, even this year when it seems like no one else that's trading or in the markets at all really has been doing well.
And the funny thing is, it's not just me. It's every coach we have. Brandon Wendell, the event I told you about live in New York, not next week, the week after.
Yep.
He's a CMT. He's an amazing trader. He trades futures in the morning. He trades spreads on SPX and spreads on futures in the afternoons, plus his options trades. He's going to be teaching all that next week. In his E-mini, the future stuff he does, somewhere between 10 and 20 grand a month is what they pull in, trading one contract 3 days a week. So,
wow.
Yeah. And so it's every one of our coaches.
Yeah, but you guys have that's impressive. I wish some of my returns were have been like that this year. Let's see if we get some tickers in the chat. If not, I'll let you kind of pull up some charts that you've been looking at, some levels that you have. I see we've got the SPX up right now, where it looks like we're below all these moving averages. What's this purple one? The 8-day moving average?
The purple, that pinkish, purplish, whatever color you decide to call it, right? I'm not a fashionista. It's pink to me, right? But the reason I brought the SPX up first, and if you see, Aaron, on my left side here of the screen, you'll see all these charts have check marks next to them, these symbols. Maybe a little hard to see. I can open them up, but each one of these 11 stocks that I have check mark out of 20 that we look at every day, each of them gapped or moved to a key level today and bounced off of that level. Had you just watched the key levels, things that I give out daily to our subscribers as far as the levels go, and you just watched those levels, there was no way you could not have found something to trade today. We gapped massively, right? Massively today on the S&P 500, expecting this big crush. We pushed right down into the 3,500, and we took a great bounce off of that. Now we're back at a key level again, which is the 8 moving average. So I agree with what Luke was saying. I caught some of the end of your guys' conversation there. I agree with everything he's talking about as far as this is not a buyer's market. This was just an anomaly in a day, right? We did have slightly higher unemployment number. I don't know if people read that into it, at least what they reported on CNBC before. I don't know if they read that into it or what the bounce was, but there's nothing technical that says we need to go up from here. Nothing at all. We did crush down to a key level and bounce, which again, there's some importance there, but we've seen these types of moves before on the S&P.
Yeah, I mean, what about like just like the RSI or something like that? Like, could you make the argument that we just got a little bit oversold?
So I am not an RSI user. Brandon
Okay.
is, but RSI, MACD, I do use CCI, which is Commodity Channel Index. You'll see that down on the bottom, right? It's kind of flat right now. And I only use CCI for one reason and one reason only. And that is for extremely overbought and oversold situations. Doesn't normally happen in the S&P, but it does happen on stocks where we get very overbought and very oversold, and it's a fade indicator. When I see we're up above or below, plus or minus 250 on a close, not a wick, on a close, then it's important to me to follow that over the next 2 days. We normally get a fade in the opposite direction there. But it's more of extremities than it is normal. It's not something you see on a daily basis.
So something interesting that I'm just noticing right now, it looks like we've had more shares traded on the S&P today. Or wait, hold on. Let me get my volume back up here. Do you ever look at just the volume? Like how much, is that something you look at?
I look at volume on individual stocks. I'll occasionally check it on the SPY or SPX. But if we're seeing a lot of shares traded in SPY as an example, not surprising with how much cash is sitting on the sidelines right now, and people are looking for that dip, to buy that dip. Was today a good dip? It was if tomorrow goes up, or if you got back out of it today, yeah. But where we're
we're already.
Okay.
Sorry, go ahead.
No.
We're already at more shares traded in the S&P in the SPY than yesterday on the total day, and it's only 22 minutes past noon. So
Right.
about 3.5 hours left of trading, and I'm looking at the here. I'll pop this screen up from mine where I've got the volume bars down here. If this ends up being like if this bar on the bottom, which is my volume here, if this bar ends up being the candle's kind of in the way of it right now. Here, let me see if I can get the RSI off here. Boom.
So I'm looking at the volume on my screen here, Aaron. And yesterday, it seems like we had very light volume. We did not even meet the average volume for the last 13 days.
Yeah. Okay. So looking back on September 30th, looks like we had about 153 million shares of the SPY traded. So we'll see if we end up getting up there passing that today.
Yeah, so right now the goal is about 94.5 million is our average for the last 21 days, which takes into account that really big move on the 30th, and it takes into account some of the smaller moves like yesterday, the 12th, where we had extremely low volume in comparison, only about 52 million yesterday.
Okay.
But when it comes to SPY, yes, I look at volume. Volume's a big indicator, and we don't see a lot of, let me say it this way. One-day anomalies don't mean as much to me when it comes to volume on the index itself. On a stock, yes, it could drive that position. If we've had a very steady volume, news comes out and we see that big volume, it's telling me traders supported the move. If the news came out and the volume is lower, it's telling me traders did not support that move. And expect, usually that's where you get reversals taking place, because you don't have a confluence. You have divergence. If, as an example, MACD is pointing down and the stock is going up, you have divergence in the market. Same with RSI or stochastics or any of them.
Yeah. Let's see. I'm catching up on the chat right now, seeing if there are any charts or stocks that they want to check out. I'll pop your screen back up. Let's see. Quantum Sand SPY, check the 3-month daily chart. We're probably going to rally for 3 to 4 days if we close green. I'm not sure what exactly he's looking at there. Quantum also wants to look at Bank of America, BAC. I was noticing that the financials were showing a lot of strength today against the market, just outperforming the overall market, even with this little rally. Bank of America's up like, what, 4 or 5% today?
Right. So don't we have earnings coming up on many of the banks right starting now?
Yeah, tomorrow, I believe. I believe JP Morgan reports tomorrow, maybe.
Yeah, so we've got some interest there, but yes, so we've got a bounce to the upside today. Great move, right? Great move, but look where it is. We are still in this overall bearish pattern. Our moving averages had been spreading out, which says the trend is strong. The last time we popped up and ran into the green line, which is the 21 moving average, we failed the next day. So you've got to look at this. Anytime you look at a chart, be very careful. I know a lot a lot of traders, I've done it many, many times, still do occasionally, get very focused on today and forget about everything else. If you remember the phrase, look left, and always turn your head to the left and look at what's going on the chart and see what else is happening there will be a huge benefit to you as a trader. So I'm looking at this saying, all right, if we can get above that 21 and close above there and then start the climb, great. But I really want to see at least that happen, if not get above the previous high, swing high we had there, for me to start taking bullish position. Now, if I'm day trading it and it gives me an opportunity, different story. But if you're planning on holding these days, weeks, whatever, make sure you know what's going on to the left, that if it's happened before, there's always that chance it does the same thing back there again.
Yeah, I'm waiting for these earnings reports. I could see it. I mean, like Jay Rice is saying in the chat, banks are cheap right now. You know, and so I could see that even if the earnings reports aren't amazing, how they might respond positively to it. And really what I like to see, we saw this with Micron a few weeks ago, you know, gave bad guidance and the stock didn't really go down. So if any of these banks, you know, give not great guidance or anything like that, and the stocks don't go down a lot, I'll see that as a very bullish sign specifically for the bank stocks.
I agree. And for me, the next step would be technically show it to me. Again, for me, close above that 21. Now I'm in a much different place. Earnings are behind us. We're above that 21. I'm in a much different place of I feel comfortable owning this position right now.
Got it. All right, let's. I want to see. So we talked about, you know, your Tesla trade. Any other individual trades you're looking at right now? You're thinking about opening.
So we did a naked put on Delta this morning after their earnings announcement. 28.5. We got about 28 cents for it. So for those that are not familiar with the strategy, watch. Let me show you. DAL is the ticker symbol.
So you're saying you're selling those puts?
Correct. So, which means I am bullish. Oh, let's try it one more time. DAL, TradeStation, seems to be taking its time today. So we sold the 28 halves today. So
it got right down to 28.5 on the chart. I'm looking at it right now.
Yeah. So we sold the 28 halves for 28 cents. I think it was 29 cents, 30, somewhere around there. They had 2,290 shares or contracts traded today. But the 28.5 puts, we sold them. And again, at that 28 cents. And right now I could get out of that trade for 5 cents. So basically what I did is I took on an obligation. If you sell to open, you're selling an option, you're opening a new transaction, and you're taking on an obligation. If your first trade is to sell, you're obligated now. What am I obligated to do? I'm obligated to let somebody put the stock to me, sell it to me at $28.50 a share. Why would they do that? Well, if the stock goes down to 24, they're going to be very happy to make me buy it at 28.5. If they make me buy it at 28.5, I'll be very happy because I'll turn around and I'll sell a covered call on it. Now I can't, let's see, for this week, I would sell the 31s. There's only another day left, but I'd sell the 31s and get 25 cents. If we looked at next week, we're looking at about a 40 delta, right? So here's a 35 delta. We'll get about 50 cents a week to sell that 31.5 option, 45, 50 cents a week to rent that stock out. And we just do this week after week after week after week. That's the cash flow. 3% a month. You can double your account in 2 years. It's rule of 72. Check it out if you're not familiar with it.
Wow. Yeah. Rule of 72, definitely something all investors should be aware of. Doesn't really matter what time frame you're on or what you're looking at, but definitely a good way to keep in mind how you can really double your money.
How you're doing in comparison to whatever else it is that you're looking at. You know, if the S&P 500 does 8% a year, how long does it take to get to 72? That's 9 years. So in 9 years, you can double your account. If you're writing covered calls are 3%. If you're writing covered calls at 3% a year, a month, that's 36% a year. That's 72% in 2 years. Naked puts, you're getting closer to that 5 or 8%. And Aaron, if you want, I can share with you guys something from last week.
Oh, yeah. We only got about a minute or two left today.
Oh, that's fine. Tell me what you want to do.
Okay. What's that?
No, tell me what you want to do then. I'm good. Whatever you want.
Oh, okay. I'm saying you can show us. It's just got to be a little bit quick.
Okay.
Yeah. Got to be quick.
That's fine. That's fine. So here's some of the covered calls and naked puts from last week, right? Is this 10/7. So this was for last Friday. I'll be doing the same thing again today, right? So covered calls on Acadia, 10.72% for the month. On NTNX, 6.69%. WPM, boo-hoo, only 3.83, right? Look at the naked puts on these same stocks, 13, 14, 9% on those stocks for a month on covered calls. When the S&P 500 does 8% in the year and you could do these kinds of returns, and if you're experienced in the trading, I know we said we were going to talk about this one day, and you're willing to go over to diagonal spreads, which is a covered call with options, you are looking at much bigger rates of return in many cases. By the way, this is not monthly, this is weekly. 6%, 9% for the week. What's our worst one? The worst one this last week was 5.64%. And that was on MOLC. Right? Not all trades, but all trades that we called out Thursday night to look at for Friday.
Well, guys, I mean, you know, if you guys have been trading options and you've been wanting to take it to the next level, some of these more advanced spreads, Rob is your guy, tradinglikeaboss.com. I'm going to drop that link in the chat. Rob's got the screen up there. You guys got to check it out. Link is in the chat. Rob, man, it's always a pleasure. Someday I hope to be able to do it as well as you do it. Gotta start somewhere, right?
Gotta start somewhere.
All right, man. Well, have a great rest of your Thursday. Have a great weekend, and we'll talk soon.
All right. Thanks, Aaron. Take care. All right, guys. Bye for now.
All right, guys. That was Rob Roy, tradinglikeaboss.com. Go ahead and hit the link in the chat. All right, guys. 12:32 p.m. I see our next guest, Mr. Steve Kalayjian, hanging out in the background. So without further ado, let's not make him wait any longer. Let's give him our special intro and get him on the show. Mr. Steve, how you doing today?
Hey, good afternoon, everybody. Hey, Aaron, how are you?
Good, good. Let me go ahead. Got my Benzinga Pro pulled up. Let me go ahead and get the S&P. We're looking at 10-minute candles here. What have you been trading? What have you been doing?
Well, we had a monster buy this morning on the opening after they pushed down to new lows. I was jumping up and down. We had about 8 stocks that we follow just on the 15-minute time frame. We had a monster buy divergence, but the real big buy divergence came off the 30-minute time frames. We were pushing down to new lows and just didn't see the confirmation, and I was jumping up and down and saying it on the indexes. The S&P's got down to the 3502. Now, I mean, when they rallied up to 33, 34, you know, we got a 40, 35, but maybe 40, 45. We waited for a pullback to a higher low. And then, but never in my wildest dreams did I think they would go from 3502 to 3675. I mean, I think there was, you know, I tell people all the time, you know, bear market rallies are more vicious than bull market rallies. I've been doing this for 40 years, you know. You know, again, I don't see it. I just think that it was fueled by monster short covering. I think the CPI number is horrific. The 30-year bonds, the TLTs were trading about a month and a half ago, 144. They dipped below 124. I'm sorry, yeah, they were actually a lot lower than that. So let me just see the TLTs what I went to here. Yeah, the TLTs, the 30-year bonds were trading 144, and they were trading around the 123. The TLTs actually traded below 99 today. So, you know, this is not good. You know, 30-year mortgages are well over 7%. You know, the Federal Reserve is going to, you know, raise rates a point. Kashari said yesterday that they're happy with a 4.5% Fed funds rate. I think, you know, NVIDIA got down to 109. I don't, you know, Jamie Dimon comes out yesterday and says he sees a 20% reduction, you know, another 20%. He was kind of critical on the Federal Reserve. They were very late to this. You know, everybody's coming out now and saying it, you know. When the Dow was making new highs, we were 0 to 0.25%, you know, and I was just telling all my listeners, this is insanity. You know, this is insanity. You have inflation. What numbers are they looking at not to raise rates, you know? You know, so I just think that this was a severe oversold condition. Could this be the low for the year? possibly. I'm still looking at that 34.50 for the year, and then we'll get some type of rally towards the end of the year. But I think 2023 is going to be really horrific. I told you last time that one of my indicators on the monthly chart doesn't go out till probably March, April, and May of 2023, and then 4 or 5 months of consolidation. Then I think the new bull market will start somewhere October, November of 2023.
Wow, so that's still about a year away from now.
But
yeah, I mean, what, like you said, there's some key levels kind of right around where we're at, right below where we're at. I do think that's kind of at least somewhat not good news, but a silver lining here is that we're gonna have a couple of key levels here, both at the kind of the 354, 355 level, and then at our pre-COVID levels around in the 330s. So if we get down there and we get a little bounce, that could be a good way to trade that. Or on the flip side is if we break through those levels, then there's a chance, we stay bearish in the short term.
Well, if you just look at the chart that you have up here and you just take your arrow from the top here and you just draw your trend line all the way down. I'm not a trend line guy, but you can see lower highs just for your audience. You can see, right. You see lower highs here constantly. We hit 4,800, then 4,630, then 4,340. This is a monster negative downtrend here, and we're nowhere near close to having it where we're going to turn, in my opinion. You may get 100, 200 point rally here or there on the S&P and get everybody all excited, rah again, but we're not nowhere. If this indicator I have does what I think it's going to do, the last time this happened was October to March, October of 2008 to March of 2009. So I think that's where we're headed when I think this indicator gets to a certain level by probably March, April, May of next year. And then 5 months of consolidating, maybe making new lows, and then eventually rip to the upside. That's what I think they're going to start cutting interest rates aggressively.
Yeah, I mean, it sounds like, or it seems like to me so far what the Fed's been trying to do in terms of slowing the economy down to limit inflation hasn't really worked. So, right, the expectation is now that the Fed is going to have to continue to raise rates. I don't know. I mean, I don't know if we know exactly. Obviously, we don't know when the Fed's going to have to. The question is, I guess I should say it's not really a question of if the Fed will have to stop raising rates. We know it will, but the question is when. Will it be, like you said, sometime next year? Will it be in 2 months? Will it be in a year from now? It kind of depends on how sticky inflation is and how much our economy can tolerate the rate raises.
Yeah, no, like I said, I think to me, I think the most important thing right now is just trade what you see. And I don't think this is a time, I think the Nvidia can get into the 85, 90 range. I think, when Roku was over 400, Roku is now 50. I mean, these stocks got absolutely slaughtered here. Square, I mean, look at these stocks are down, significantly. I think Tesla's going to get down to the 175 level potentially, maybe 165 level. I mean, Jamie Dimon came out, the head of, JP Morgan, that this was before today's drop when they were trading around the 3650, 36. Yeah. He said we could see another 20% drop down in the Dow, on the S&Ps and the Dow. So I think, me personally here, I think that what's really important is that, overall, people have to realize that if you're long at a lot higher levels, you're going to just have to grin and bear it for a while here. I think 2023 is going to be pretty tough.
Yeah, certainly this Tesla chart does not look pretty. Making new lows today, we did, I believe, down in the 208 range. So yeah, Tesla. We'll see. And then Tesla, of course, now is in the S&P 500. So it's going to be, it's going to be reflected in the indices. I see Enoch line in the chat saying retail buying the dip. I'm not quite sure.
I would buy the dip to what degree? I mean, if they get to 34.50, maybe you want to trade them. You get like move back up to like, 36.50, 3,700. Look at this chart. there's no way I would want to buy anything long term with this chart right here. I mean, yeah, you're going to get your bounces, and then I think ultimately until that indicator of mine gets to the monthly chart. Now remember, this hasn't happened in 14 years, right? So this is pretty good because I think then you're going to get a monster bull market once that pans out. But that could be, 2,500, 2,800, 2,200 on the S&Ps, 2,500 on the S&Ps.
Yeah. Let's see. Jay Rice saying VIX was red this morning. That was a sign that there might have been a reversal coming. Certainly, yeah, I think a lot of people have been surprised that with how much the market has come down, the VIX still, it's not low. It's higher than it has been, but it's still, I think some people would argue, relatively low compared to the drawdown in the market we've seen.
Yeah, well, I mean, the VIX, the volatility was here. I mean, you saw it down 80. I mean, you saw the S&Ps were trading 3640, and the CPI number came out. They dropped 100 handles. Just exactly what happened last time. This time they dropped more. They dropped from 3640 to 3502, right? They dropped 138, and then they ran 173. Insane. Last time that never happened. That didn't happen. They just went boom down to 4175, down to 4020, and then they just the next day, the next day, the next day, the next day, all the way down to 3800.
Yeah, I mean, so how would you, tell people to like for people, Jay Rice, I agree, it's a trader's market.
100% trader's market. 100%.
Been a lot of volatility. Are you in and out of your positions pretty much on a day-to-day basis? You don't hold anything overnight?
No. We, what we do here, we teach intraday trading, and we teach intermediate and long-term patterns for people who have that bias pretty much. And a lot of people have been educated like on the, if they're bearish on the market, they take positions on like the SDSs, the SQQQs, the TZAs, the QUIDs, the SDAOs, and things of that nature. And then you got so many people around the world who just want to intraday trade the market and the volatility and compound their returns versus just letting it sit there and get slaughtered.
Right. Yeah, I mean, it seems like from a macro perspective right now, it's kind of, don't fight the Fed. Every time we get these little rallies, they're just short covering rallies, and that the market is still very much in a downtrend. Let's see if we've got any tickers in the chat that people want to check out. Jay Rice saying AMAT. What is that? Applied Materials also went green on Horrible Guide, just like MU a month ago. That has been something that I've been looking at, is companies when they give bad guidance and the stock either is up or just doesn't really go down, and showing me that, okay, going into that earnings call or the guidance, the stock was already pretty oversold, and there's still demand even with the company weakening a little bit. So this is Applied Materials.
These stocks are going lower, but it doesn't mean you can't have like monster. I mean, Micron just rallied like $4 off the low today. AMD rallied $5 off the low. AMD was 130 something dollars. It was $50 earlier this morning. I mean, these stocks have gotten decimated. Okay, I remember years ago, AMD went from 3 to 30, and people were jumping up and down. Then eventually from 30 to 60, 60 to 90, and 90 to 130. It doesn't mean that this is over by its, I'm hearing all around Wall Street yesterday, a lot of firms are giving pink slips to people. This is going to start ending bad here. I think 2023 is going to be, I don't wish this to happen. I'm just reading what I'm seeing and hearing what I'm seeing, hearing what I'm hearing from people. But again, the Federal Reserve is the one to blame for this stuff. You had all-time highs. They fueled the market. They had nothing but quantitative easing. They just printed money. They, bought everything in sight. And then when the numbers were coming out, they just ignored the numbers. And in my point of view, I think they were trying to say, well, okay, we have high inflation. We'll keep high asset prices to offset the high inflation, right? But not everybody's in the stock market. The average person doesn't have money in the in the stock market, right? So if you have 8% inflation, right? If you make $100,000 a year, you have 8%. Now you're only making $92,000 a year. I mean, you're taking it on the chin here, right? Everything is, significantly a lot higher per se, right? So they just sat on their hands way too long. I mean, that's what Jamie Dimon even came out and said it this morning. I mean, Jeremy Siegel was on ranting again today on CNBC, right? So, now all of a sudden everybody's jumping out and up and down. Where were you when the S&Ps were 4,800 and they were 0 to 0.25%?
I see Tommy's touching the chat saying he thinks bloodbath tomorrow. When does Jerome speak next? I believe
2 weeks, right? Right before the election.
Yeah, maybe 2 weeks from now. Let's see FOMC calendar real quick.
And normally bear market rallies end up, going on for a day or two, and then they just got absolutely kabooshed after that,
Right. Yeah, I'm not seeing anything till November 1st and 2nd.
Right. That's what I said, in a couple weeks.
Yep.
We're going to raise them a point.
Fed funds are on the 2-year, which is what, I wonder what the CME's watch tool has. I'm sure that it's like 100%, either a 75.
What's your bearish sentiment? Remember the bearish sentiment we had last time? They pushed the S&Ps up to 3,800 last time that happened.
Yeah, it hasn't peaked back up yet. So this past weeks, we looked at it earlier, pretty in line with last week's. You see the a little bit less bulls, but so far our peak bear was still a couple weeks ago, September 21st. So a little bit less than a month ago.
Over 60. I remember seeing over 60 last time we were on or something.
Yep, 60.9.
We got that rally up to 3,800 on the S&P.
So I wouldn't be surprised next week if we see it get back up closer to that level if we get some more down days. If the market keeps moving,
probably get 3,400, 3,450, and then you're going to get a snapback.
Yeah, exactly. But if the market keeps running like it is right now, then we'll see more bulls next week.
Then I think if they start rallying and work off this oversold condition, I think they're gonna get kabooshed.
Yeah. Bears 55, bulls 20. Again, a couple weeks ago, a few more bears out there a couple weeks ago. But all right, Steve, I appreciate you coming on. I'm going to drop that link in the chat, tradeeasy.com, unless you've got any other stocks or things you want to leave us with today.
No, I just think that right now what I'm looking at, we just caught a nice long. I think that obviously the lows are in for the day. I'm looking for a monster pullback here on the 15-minute time frame, and I think they're gonna that pullback will be a monster long. We just got on this pullback down to 33 on the S&P. I think that this rally just now up to what are they up to now? 51. So this rallied 19 points on the S&P. I think the next push down between now and 3 o'clock is going to set up on the 15. It's going to be a little pop. It's going to be above 3,600, and then I think they explode later on this afternoon.
Yeah. Well, we shall see. Hopefully, I'm hoping the rally continues today, even if it is just a silly bear market rally. But Steve, again, thank you for hopping on. As always, dropping that Trade Easy link in the chat. Go visit that out if you want to learn more from Steve. Have a great rest of your Thursday, man.
You too, Aaron. See you next week. Good night. Take care, Aaron. Take care, everybody.
Yep, take care. All right, guys, Steve Kalayjian from TradeEasy.com. Thank you, Steve, as always, for hopping on. Let's talk some stocks from the chat. I did see someone asking about Domino's Pizza. Let's go ahead and get our Benzinga Pro pulled back up. Gonna make me hungry for lunch. So I've got some thoughts on Domino's. I believe the company reported earnings. Let's see. DPZ. Q3 earnings were released today before market open, so reported slightly better than expected Q3 sales. Here's what I do think about Domino's is what you got to think about is if we are, going to see a broad economic downturn, Domino's Pizza is a name that I don't think benefits from a recession, but I think holds up, right? Think about like people that are going to be less willing to go out to a nice dinner. Maybe they're gonna get Domino's that night for 2 medium pizzas for $10.99 coupon deal instead of going out for dinner. I'm curious how Domino's Pizza and the business has changed a lot. I mean, the stock has been just an absolute monster. I'm curious how this thing did in 07, 08. Yeah, it didn't do great. Got freaking crushed. went from 36 down to 3. So you know what? Recent history will tell us maybe my thought process on Domino's being a decent recession stock is wrong. So yeah, I don't know. Take from that what you will. Other stocks we've been talking about. Apple getting a nice little bounce today. Scary looking chart to me. I don't like, you know, it's slight, but you can see 3 times in a row we made lower highs. At least we're not taking out these lows that we set in June. You can say something. You gotta say something nice about the chart if you're looking at it. That's the only nice thing I can say is we haven't taken out the June lows yet. Won't be interested really until, first of all, you got to clear this level, the 156 level. If we clear that, then you probably got room to run at least up to that 175 level. But again, not really interested in Apple until it goes up another 15 bucks. Easy Mike saying Chipotle is what he trades. Dude, Chipotle has been frustrating me as a customer. And I love Chipotle. This is one of those stocks where it's like, man, if I would have just bought the stock when I started like going to Chipotle, like when I was probably like 14 or 15 back in 2011. I remember like when it first started getting big, and it was like, yeah, man, it was kind of a meme, you know, it was kind of a meme, like a, yeah, I don't know. Anyway, if I would have just bought this stock when I started going, like back then, it's gone up so much since then. But Chipotle has been frustrating me. Because the one by my place here in Michigan is like always out of stuff. It's supposed to be open till 10, but closes at like 8. It seems like to me from what I've seen, and people were sharing a lot of posts from the Chipotle workers subreddit, etc. And like a lot of workers were complaining about different conditions, that it seems like they just like don't pay the workers enough to actually care. So when you go in there and they're like out of certain stuff, it's like they're just like, yeah, whatever. Like, I'm sure some of it's on the supply chain too, and not just all labor, but definitely where they're closing like 2 hours early has to be just a staffing labor issue. Long Costco. You called the background producer, Zoltan? CMG, a glorified Taco Bell, rice, beans. I get it. I don't think here's the thing about Chipotle is it's not very like if you try to make Chipotle bowls or a burrito at home, is it's not very economical to buy like or it doesn't, it's like time wise, like you're gonna make one serving of rice, one serving of bean, you know, all these individual things when Chipotle is just really easy. I don't think it's really healthy by any means, like probably very high sodium. But in terms of like a quick meal, it probably is on the healthier end of spectrum that Americans get on like a weekly basis, which is sad to think about. But I mean, at least the quality of like the chicken and stuff, like way higher than Taco Bell, I gotta say. I disagree with that. Glorified, maybe like rightfully so, because it's better in terms of quality of the food. Chipotle's guac is also like pretty good. And I like the rice. How are the other like restaurant stocks doing? Cake? You got to think Cheesecake Factory doesn't do well in like a recession, right? Yeah, I mean look how much this thing started getting crushed well before the recession here in 07, 08. Went down to $5 from 40. Starting to get crushed here, well below pre-COVID levels. Remember, like right when COVID hit, like Cheesecake Factory was just like, "Yo, yeah, we're not paying our bills." That was kind of dope. That was like, you know, they were like they stood up to the landlord. They were just like, "Nah, fam, we're not paying our bills." Ooh, Nate G saying it's almost Chipotle season. Chipotle, 3 burritos a day. Chipotle is way better than Taco Bell. Thank you, Jim and stuff. There's still no fear or blood in the street. I get that. And that's what a lot of people have been talking about. We need to see this capitulation point. We need to see, you know, ARK get down to this level. We need to see Tesla this. We need something to break, something to fail, pain in the labor market. But the flip side of that is, do we? Like, what if what plays out is we're getting close to that and the Fed intervenes before a bank like Credit Suisse or Deutsche Bank collapses? Because again, when we talked about it, this is the basically the whole economic framework from the like built after the great financial crisis to try to prevent another financial crisis was based on how the Fed should intervene in times of crisis like that. So I don't know if necessarily like you can say 100% factually that before the market bottoms, we need to see some huge capitulation point. We need to see fear or blood on the street. I think in the past that has been true. That doesn't necessarily mean that this time around it is true. But again, I'm certainly not, you know, just outright bullish from these levels. I am probably more bullish than the average person in the sense that I think we're closer to the Fed being forced to pivot than some people think. You know, like I don't know. I forget exactly what Steve Kalayjian said, but something about, you know, if some people have been talking about the Fed having to pivot like sometime mid 2023, like I think it could be as soon as the very start of 2023, like January. And if that's the case, then we're only 2 months away from the Fed having to pivot, you know, and I could be completely wrong on that. But that is why I'm personally more bullish than average. Of course, until that happens, I'm bearish. I don't think you can fight the Fed. I don't think there's a reason to try to fight the Fed. And there's also a chance, though, by the way, that the market, you know, it starts to bottom out before the Fed announces it's going to pivot or stop cutting rates, just in anticipation of that, right? Because the market is able to interpret basically the probabilities, odds of everything happening all at once. So looking at the bond markets and recession fears and labor markets and all this, it's going to be able to, you know, it potentially could be giving us hints essentially that the Fed will be pivoting soon. So who knows? Feels bull trappy today. I certainly agree, but it seems like that's the consensus, which makes me almost think like if all of retail is going out there today saying, oh, the market's up and inflation was hot and it's going back down tomorrow and buying puts, you got to think about what will bring max pain for retail investors. And it might be that the rally continues for a little bit tomorrow and then drops. Because usually when the market is up, it's drawing more people in. More people are buying it because it's going back up. And that certainly will be potentially happening today, right? People coming in and buying the dip because it's green and they're saying, oh my God, like what if this is the bottom? But I would almost bet that more retail people are like, you know, either bearish, trying to go short, thinking about going short, trying to figure out how to go short. So yeah. Very high sodium foods, and it's a crappy type of salt. Yeah, I mean, like I said, I don't think Chipotle is healthy. Like I know if you were just binary, like healthy or unhealthy, probably too much sodium, all this stuff, but it's relatively more healthy than other quick options that people have. I had McDonald's last night too. All right, guys, it's 1 p.m. Time to get over to Money Mitch. He's going to be talking to the Bolero president and CFO, Brett Parker, here at about 1:05 p.m. Then he's talking to Tom Hayes, hedge fund tips, at 1:45. I had a great conversation with Tom a few weeks ago. Appreciate you guys. Smash the like if it's not too much to ask for you guys. Can't wait to be back with y'all tomorrow. Till then, it's just a day away. Let's hit that YouTube outro. We'll be back. Peace and love.